Yeah, quick question on the, Ethereum. I could see that it's been 1, 2, 3, 4, 5, 6, 7 weeks down in a row.
Mhm.
And now we have a first green candle for weekly. And I have identified on the weekly time frame a strong line of resistance support, which is $2,145, where we had multiple touches. And I was wondering if it could be a next target for in case of reversal. There's a very strong line of support or resistance. And I have to say that by doing the exercise of drawing the lines of resistance and support, it tends to be hard to read eventually because there are so many lines depending on which time frame we use. But if you draw them on the weekly time frame, you don't have much of them. But then you go down to the 1 hour time frame and you have multiple level of support and resistance on the top of it. And then this is where it can be confusing as which line of support prevails really and which line of resistance is key. And I could hear some people saying the volume also is a good indicator. So depending on the volume at per level, that can be, for example, the $30,000 for Bitcoin is a huge level of support or resistance because of the volume that is exchanged at this level of price. So I heard that as well. So some people using an indicator called VPVR, which is something that is on the side of your trading view, and it shows you the level of volume per level of price, and could be a way also to identify a key level. But yeah, I think it can be subjective. Yes, you have obvious levels when you look at the weekly, daily, yeah. But then the lower time frame you go, then it can be it can become too much indicators or too much lines of to consider then. So this is why I was asking for a review.
And so you start, I think what you said could kind of a market profile where we have kind of the horizontal lines in here, and maybe that it's going to tell you to see the volume, where the volume is of the biggest exchange. Maybe that can work as well as a good zone for a support resistance level, depending on the lines where on the zone where more orders exchange in that specific zone. That's maybe an indicator that you can use. MetaTrader, I don't think it has it. Maybe TradingView you can implement it in there. If you want to practice support and resistance levels, if you want to take a look, just go to the website. Forget what's going on the most recent price and start and practice. So you need to practice to start identifying important zones. You're going to have this is Ethereum back in 2020. For example, this one would be important. We have price going up. We have price breaking this level in here. And just go for the 1 hour to have more information. Right, this was kind of one of the webinars that I already did before, just following price and getting used to see price respecting previous levels of support resistance. There's not going to be any webinar that's going to teach you, that's going to make you identify straight away support and resistance levels, aside from actually doing it yourself, practicing through the charts of seeing price moving and of seeing how price respects previous highs, previous lows, and levels. That can be done on the 4 hour, and then if you go down to the lower time frame, you'll see that price is going to react from those levels in the future. This is one of the most you need to practice. You need to practice, and you need to go to the website and try to find those zones. So we have this high, we have this low, and you can start from here. After that, we have these new highs created, this level, and eventually you have this last one in here. Meanwhile, we have the price going up and down like this in this big compression zone. right? So after the break, maybe you're looking for shorts when price is getting close in here, or even in here, we have all this level. Maybe you're looking for shorts, maybe it even works in here, the first short, and then you finally kind of have the break, and that's exactly then in the future, that's where price is going to react from, and price goes up. Again, break, and then price goes and reacts from. We have now this level of resistance, and we have this level of support. Price goes all the way down, respects this level of support, and goes up. And now you start moving chart to the left side. Basically, you are within this range. Price goes up, goes down. We have previous levels in here and in there. So again, we have this high in here. Price respects it a little bit, respects it, breaks it, and you can have this continuation to the upside. So this could be a level as well. There is going to be some opportunities either when price breaks it immediately and you may have a breakout strategy, or if you don't have that breakout strategy, maybe price is going to break it, and instead of retesting this line immediately, price will just carry on to the upside, maybe create some lows above it, and then carry on. Keep an eye on these ones. On these ones that price doesn't touch it immediately, keep an eye on them, keep your eye in there, and you'll see how price behaves there in the future. This will be one of the best support resistance zones that you could look for price to react from in the future, especially in the lower time frame. Especially, as I mentioned before, if this is a demand zone aligned with this level, that when breaks it, keep an eye on those. When they are touched.
Do you consider the wick or the body essentially?
I like to use the highs, so the wick. I like to consider the wicks, but for example, maybe this one can be also important. So maybe you can also draw it as well. I really like this kind of wicks for me. This is kind of works as a supply zone, these wicks. This is on 1 hour time frame. And for me, this is where the orders are. So I'll be looking for it in here for the future. But yeah, I like the wicks. So when I'm drawing supply zones and support, I like to use the I like to use the wicks. So yeah, we have this line as well. Price goes up, breaks it. It didn't really got there. Price goes up again. But within all these levels, because you trade in such a lower time frame, can you see maybe even in here there's already a break and a move up, which let's just test it. Hopefully you have enough data on the 30 minutes in here. You see, because what happens is, okay, you have this one, and all of a sudden you have this one as well, but price starts creating a zone just underneath it, right? And this is where the dynamic of the support and resistance zones starts working, because initially you have these ones, but just below you have new ones in here, and you have to see the dynamic. Something that usually you can see happening is price breaking a level. So basically price breaks one high, goes down just to respect the previous level, and then carry on to the upside. You can see this kind of move happening quite regularly. We saw it as well on the dollar index when we broke one of the highs on the 2020 high. When it broke it, price then respected, and it went to fill the next high of the 2016. And you can see this happening quite often. Again, there was this demand in here that broke the zone, price went there and reacted in the future. But if you carry on like this, now we have this zone. I'm not sure if this is important or not. And we carry on, and now we have this one. All right, so this is the new zone in here, and this is important. And we are in between these two levels. We have a break, again, respected now this previous level of support resistance that was in here. We have 1 touch, 2 touches, 3 touches. Price makes a decision to go up, and now price retraces, respects this level, and goes up. Can I say about this?
So now you're on the 5-minute time frame, yeah.
Yeah,
okay.
which is maybe too much. Let's go to the 13. But yeah, honestly, you need to keep practicing to see.
Yeah, I understand the touches. The thing is that you can see them everywhere, so eventually you have too many lines, and that's what I want to avoid. I want to reduce the number of lines and understand the key ones. And then
the key ones just look for the ones that are tested more times than the others. For example, this one is a little bit confused. In here, it's maybe a little bit more clear. We have this one in here. We have this one that was respected in here, and it's respected in here.
So 30 minutes time frame is a good one, yeah. So that's if I want to trade the 5 minutes.
Even the 4 hour, like 1 hour. Okay, 1 hour. You want to go from 1 hour to the 15 minute to the 5 minutes can be 1 hour and then 15 minutes. But you'll see this zone as well on the 4 hour time frame. You could see.
Yeah.
Damn it. 1 second, let me go back. You can see the break of this. Just wait for the extremes to be broken, and then you see that price is going to, and then see how price reacts from there. See how many times prices touched it. It's important as well. The importance of touching 1, 2, 3, 4 times. It's important to give it more strength. Don't just look for touches kind of as a resistance zone, kind of like this. Actually, then see after the break if actually price trend respects it as well as a support now. That could be a good indication as well to see price trend react from there in the future.
Yeah.
For example, this one as well. So we have this wall. Of course, then price as it moves, when it breaks, it can correct, it can go there, react straight away from there, which makes the zone weaker. And if price does this, most likely then is going to go to the one just underneath it, which will be maybe now this one that you have all these highs in here aligned, and you have these demands. So this is another situation, just as I mentioned before on Euro. I think when I started, that you have price reacting initially from the higher high that is broken, which is happening here. So we have this higher high, price breaks it, it reacts from there. Is exactly just where Euro reacted from, and it already broke the highs of today. And then price goes up. And then in the future, we had this zone just underneath it. And that's maybe where then in the future price is going to react from. Okay, in this case, actually, it basically spiked from there. But usually, this is a good zone to look for. So maybe this one could be the first zone to look for the reaction, and this could be the second zone to look for the reaction in the future when price is eventually coming all the way down. So these two levels are actually important if you want to draw supplies and resistance levels. These ones are important. The higher high, or it could be kind of the lower, and then the next level of support resistance that you can see just underneath. And usually how this combines in this sense that you have highs being created, price goes down. This is a resistance level, price comes up. Now we have kind of that fake breakout. Price goes down again. And then eventually we have price coming in here. Now price breaks it. Price goes up. Okay, let's make the break differently. Price now breaks it. And kind of these are the two zones that I mentioned before. Basically you have this one in here. And you have this one in here. Right, eventually when price breaks to the upside of this level, and this is usually the first zone that price reacts from. But in reality, this is then the demand. The demand you're going to see it in here aligned with this size. So first instance to look for longs, it's in here, and in the future, you may have price coming all the way down, now breaks this low, but it reacts from here, and it can react from there. From here, price can either respect this now previous level of support resistance and go down, or you can actually, let me actually do this in 2 different colors. You can take a screenshot of this setup if you want. And price can actually expect it. Now maybe that, now react it on the opposite side, and now go up from here. If you just define these levels, actually do it in red, you can take a screenshot of this. And this is going to be a great zone to look for trades. You can look for trades literally in here as a long. First, you can look for trades in here as a short. You can look, depending on where this high is reacting from. Let's pretend that this is a zone in there. This is the previous support zone. You can look for shorts in here. You can look for shorts after the break of this line is in here and the retest of this previous level of support resistance. And then you can start looking for longs when you have this high being broken. You can look for longs as a continuation in here, and you can look for longs in here. Be aware that your target initially is going to be this high. If actually we break this high, there's maybe then the continuation to go all the way till here. You can use basically just this pattern to combine with your indicators as a trigger to go look for longs and shorts, and you have it. I already show a few examples of this setup. Basically, Euro just did this today. This one is a zone that price likes to react from. I showed it as well already, a few examples of this. Yeah, so if you want actually to combine a great strategy with support and resistance zones, you can just use this one. You have liquidity underneath this wall that is created, which is perfect when price reacts from this level, and so on and so forth. Me personally, sometimes I actually just wait for this level. I wait for this wall to be created.
So in this example, the first fake out was created a new level, and then from there you can make your decision in the future.
You mean this one, or you mean
this one? Yes, this one, yes.
This one.
No. The one on the
this one.
Yeah, that one, yes.
Yeah.
So that one has created a new level from where you
for the future, yes.
For the future.
When it's broken again, it kind of creates a good zone to look for the long.
When you are when the decision is made, either it's going to the yellow side or the green side, right? Going,
in here,
yeah, right there. So is there a way that you can maybe read volume just before it approaches this supply and demand zone and say, hey, there's a lot more sellers coming in, so maybe the probability is a little higher, or vice versa, there are more buyers coming in here?
Yeah, maybe if you play around with the volume, that could be a good test, a good study to do, to see exactly the kind of volume that is exchanged. Either you can start even to look at them in this, when price actually breaks this level, that could be the first one. Maybe see how many orders as well are being triggered in here, and then let's see how price actually reacts from this level. And unfortunately, I don't really use volume as much, just because on Forex, of course, it depends on the broker and everything else. If I was maybe trading stocks, it would be completely different for me, or futures or crypto. So what I try to use as an indication, or kind of to try to predict if actually the green or the yellow scenario is going to happen, is, as I mentioned before, where this high is reacting to on the left side. I try to see where this high is reacting from the left side, and I try to see actually where these lows are reacting to on the left side. If these lows are actually reacting from an important zone at the lows, like imagine that you just reacted from an important support zone, you didn't break the zone, you're like a weekly zone on the support level. Maybe then this is a major break to the upside. The break of this low, then the second break, it's a major break to the upside, and maybe the next target or the next, let's say, supply zone or resistance zone on the higher time frame is way above it. So maybe this could be a good trigger as a continuation to go higher, and not just as a small reaction then for them to go lower. On the opposite, if this high is actually now reacting from an important zone on the left side, maybe the break of this low, it actually gives indication that price wants to go lower, and then maybe I'll be looking for this. After the break of this could be a good indication to look for the sales. So that, for me personally, I always try to see where these highs and lows are reacting to on the left side. I think we even have kind of a, let me see, Euro. think there was kind of a I don't think euro is a good example. Yeah, I don't think euro is a good example. But did you understand what I meant? Like maybe this one is a good example.
Yeah, no, I understood. Thank you.
Like it depends where this high is reacting from. It depends kind of where this high is reacting from. Is this kind of the final move, or are you expecting price to go at least to retest those highs? So after we have this break, kind of price could have done, again, it depends as well if we actually are reacting from here or not. For example, in this case, this low hasn't reacted really from this previous demand zone. So we have still space. Price basically did, where is Ethereum? Where is the chart I was just mentioned? Okay. This one second.
You were on Ethereum. Yeah.
Yeah. So if I combine these two together, second. How can I get there? This is going to be tricky. Yeah, I cannot really do that. I think you can see this more or less, right? And this one. So basically, if I take a look at this, let me just delete all this. So basically, you have this transition from this size to here, right? The break of this size, the break of this size in here, and kind of this is the demand. This could be the demand in here, and in this case, kind of I was looking for maybe the break of these lows. Could be the break of these lows in here, and in this case, kind of what I was mentioning here is if to see if price actually kind of after reacting from here, if it would go higher or if it could react and go down, right? However, in my scenario in here, I was already considering that price had touched the demand zone, right? But in this case in here, price hasn't touched the demand zone yet. The demand is here. If you just change the time frame for the 4 hour, you'll see that this is a demand. This is a kind of a decision in here where price shoot to the upside. So yeah, so price hasn't moved in here. So in this case, actually price reacted and still go down and still went down. Kind of this green scenario still happened a little bit, but the reality is that the demand was still a little bit below and not exactly in here. I don't know if I make myself clear what I meant. So it's kind of on my scenario that I drew in here, these lows, they should have already touched this. And then yes, and then we would have this because this was hasn't touched yet the demand. Yeah, I'll be okay with the new low and with the new low from here, and then you can have that move higher. Yeah, I don't know if I made myself clear, but yeah, it's around support resistance zones. And playing with in between the levels, right? So for example, even in here, actually, if you just take a look at this level, you can see again price breaks lows, look for the next one. Price breaks lows, look for the next one. Price breaks lows, look for the next touch in there, somewhere in there. Even Ethereum now and the Bitcoin price broke out those lows. Where does it react from? It goes and reacts from this level in here, and it now pauses in there for a while. Similar scenario, price breaks these lows, it goes reacts from this low in here, which is actually as well kind of a supply zone. and just see the dynamic of price breaking a low and then go retest previous level of support resistance. Price breaks lows, goes, this was kind of previous level, and so on and so forth. This is actually a great example of what I just mentioned before. So price kind of retesting first this level that I mentioned. Whatever done. So the pattern that I was saying, in this case, it's the opposite. Eventually you have the fake out, price goes up, and now breaks it, and now respects this level. In here, price goes down, price does whatever it does. It's actually good that it breaks a new low, and now retests, and now it respects the second level. The second level, combination of these lows are in here. You can see this one, and this is actually the supply. You can see the supply zone in there, and that's actually where price reacts from in the future. So now if I would like to carry on with the same pattern that I just drew before, maybe now I would maybe see in the future when price comes back, maybe respects a little bit. It's going to break it, maybe not so much. May break it, respects it, goes up, respects its level and goes up. And again, it keeps respecting these two levels, this previous level, where we're going to have some demand in here, and so on and so forth. And price keeps bouncing in between these levels, collects orders from here, go higher. This was the next zone, goes higher, maybe respects from here now and goes down. It depends where this reacts from on the left side. And price just keeps moving like that. So this is a good example on Bitcoin of the scenario that I just mentioned before. Price first reacts from this previous low, then in the future it goes there and reacts from the other lows that were created kind of in between. A good example of what I mentioned, the spice as well. Where was it? It was somewhere last year. Actually, saw that level. 1 second. It was somewhere last year. Yeah, it was kind of here, I think. Yeah, price first kind of respects this level, goes up, not so much, but then you have all this line and the supply zone is somewhere in, not this one. Supply zone was in here, and you have that flip to the upside from here up, and there you go. And you had all this previous level as well, and there's maybe some others in there. So we have this strong level, price respects first, not so much of a good, price didn't really went that much higher, but then it went out of here and you find the demand that is aligned with this previous level support resistance, and price just shoots to the upside. You carry on and you carry on and you carry on, and you see price behaving in a similar way. So in terms of support resistance, find the obvious ones. That's the most important thing, actually. And you'll see how price likes to bounce in between those levels. Is this a good zone? This one. Respect, fake out. Again, fake out, goes, react, go down. Because if you are saying what is a good level, even here on the lower time frame, like basically for your case on Ethereum, Seb, if you just drew highs and lows, if you just drew your support and resistance zone on the 4 hour, that's basically just lines. It's going to be maybe this line and maybe this line. Maybe you don't have anything more within this level. So if you are just waiting for price to be around this level, to approach close to these levels, they're going to be kind of bored because price is not going, it has been spinning out these last 2 weeks. And it maybe just once it touched there, and now maybe, yeah, it never came to the low. So now we start maybe drawing some other smaller zones. We have this level, but it is already in between, right? So then you start maybe just trying to see breaks of highs, if you want, then respect previous level of support resistance, and maybe it's more of a scalp zone than
exactly
than anything else.
I think it's a short-term trade here.
Yeah,
just to in and out, and then try to catch some small pumps. But yes, it's not a huge change over the time. You can see it's flat, but it's kind of bottoming. It could be a reversal.
Yeah, it is. So yeah, now it's in between, right? Then of course, if you want to start trading from these extreme zones, okay, you see you have like you start doing the same. You have these lows, you have these highs, price break it. This is a high as well in there, and you see how price reacted from there, right? So you kind of adjust. If initially I was considering this low, if initially I was considering this low in here, but then you see price, you start, for example, you start following price in here. You see price reacting from there. Price goes down, go down. Now we have these lows, and all of a sudden we have 1, 2, 3 touches in there. 1, 2, and then somewhere in here is kind of the decision to go higher, right? In here, and now you adjust to this one. This is the most recent zone of support resistance that was created, and let's see how price behaves. There you go. Price react from there. You have your trades. That's it. If you're just looking for small scalps, that's basically how you start following price in here as well. Like we have this high being that created over low. We have the break of the high. You have a few touches in there. There you go. Maybe you have your trade to go look for the long after the break of this zone. Of course, it's a little bit more risky. It's just a first touch, and it's just an lower time frame. So always manage the expectation of your targets. Don't expect price to just go into the moon. But yeah, you have your maybe like this. You could break it. You have 1, 2, 3 touches. I think this was a trade that we did last week. We talked about it, and it could be maybe a good trade in there to look for the short. Actually, I think you trade this trade. Actually, you said last week. I think you kind of catch this one or this one. I don't remember which one.
Yeah, I don't remember exactly when I entered. Yeah, I think it was. I was longer last week. Yes, on one trade that I demonstrated.
Somewhere in here still. So you see kind of break of a previous structure, and you go. If you and this is maybe what you have just on Ethereum at the moment in this moment that price is ranging, right? If you were comparing with the last month or something like that, maybe you had better opportunities to look for example, the break of this one, breaks it, price keeps respecting this level as a resistance zone, and you can look for the short. So yeah, basically all this move down, it was 1 week, and price is already in here for the last 2 weeks. That's when it's tricky to try to force it. If you just want to look for those support and resistance zones on a higher time frame, just try to add, if you can, try to add more assets to your portfolio that you can maybe try to look at other crypto other coins to try to look for. But you can see even on lower time frame, breaks it, it respects it. Maybe now we have this level. Let's see how price reacts in here in the future. But for now, we actually had these highs. We had this strong move up again, demand zone, price goes back and retests and retest it. So again, if you are looking for the support and resistance on the lower time frame, you could have had this opportunity, and surprise, it's still aligned with this one that we just saw before. And there you go. You have it on the downside, and then you have it for the upside. Now maybe somewhere in here. Let's see.
You came back on the 5 minutes time frame. So
yeah, that's the time frame. It's the one you're looking. That's why I just did it. On 1 hour, there's not much to do now on Ethereum. But if you want to play around on the lower time frame, somewhere in here, and then can you see how price bounces for the downside, bounces from the upside, still bounces from the downside in here, breaks it. This zone is still now refresh, and price now bounces. Now manage your targets accordingly. For example, this one, if you want to sell in here, price went down and respected exactly the next level of support resistance with this demand in here. So it's not just because price broke this level that's going to go all the way down. Trade the next zone, which is the next level of support and resistance. And you can keep playing around with these two lines, one up, one down, and you keep following how price does it. Next time price breaks this, let's see what it does. Now, next time price breaks this, let's see what it does. And you can see
so now, for example, we can see the price going down. It would go down to the level of below, which is the one that is, we can see multiple touch possible. Oh, you were
1 second.
on the 5, yeah.
No, this 1 minute. If you want to actually go specific, we had this previous one. Price breaks it, goes up. Let's see if price breaks this level. But this is already too much, right? This is already
1 minute, slow, low.
Yeah, but this is already too much in the time frame. And what you don't need to do either is to always try to predict every movement of the market, right? Like if, for example, if you draw this this line in here as a support resistance level, or even this one, you don't need to start predicting anytime like what price is going to do here is going to go up or down, or in here or whatever. Just wait for price to get to your levels. If you're looking for a short in here, yes, you can try to look for. If your setup tells you to start looking for a short in here, just try to look it, try to do it, but you don't need to predict every single candle what price is going to do it. That's not our goal here. Otherwise, you're going to start. Otherwise, it's like you're always chasing the market, and you don't want to do that. You don't to be reacting.
But if you look at the midnight 30 minutes today at midnight and 30 minutes, you have 2 peaks. It was a kind of max, you can see. So
this one, market open here.
You are on the 30 minutes. I am on the 5 minutes. Yeah, this.
Did price open somewhere in here?
No, above. If you go to midnight 30 minutes. No, we don't have the same time. So what time do you have? 1 more hour then. 1 more hour. The top of this pump. Yes, the weeks, the 2 weeks. You hit even if after. You see the 2 weeks. That would be a support now, because I can see that as a line of support. For example, if we extend to the if we create a line of support here, I can see that it was kind of multiple time it was turning around this price after that. So
price in here.
Yes, exactly. Yes. So as a next step, I would say, would I be right if I say I wait for the price to go to touch this level, and if I see a bounce back, then I can start to be longer on the short, on the scalp, for example.
It could be the way I like to the way I prefer to do it is actually to see some space or some zone that is fresh. So I could see price breaks it in here. In here, there's nothing much. I actually pay more attention to this demand zone than exactly to this line at the moment where price reacted from again. And in here we have this. So I don't just look for the horizontal line. I try to see what's going on in between the zone. Like I try to see what kind of decision is being made around the zone, and you can see in here this is a strong move up. Price didn't go there; it actually went there. Then in the price didn't do this immediately. Price did there, reacted from there in the future. So you don't really want to try to trade every small touch, every touch. I like to see price kind of creating the best scenario to actually then go react from there in the future. I like to see kind of a demand or supply zone aligned with it to give me a little bit more of an extra confirmation. In this case, maybe, but then in this case, this is no longer kind of the high or lows. Like this case, this would be the low, this would be the high. So maybe it would be a good zone to look for the for the long in there. At this point, kind of this is the low and this is the high. So at this point, this is kind of already a mid level to look now for the maybe either for a long or a short position. I don't know if you understand what I mean. Like this is a high. Like in here we have this high and we have this low. Then we go up. Okay, this small high, this small low that broke this one, and now we have this high. This is the last low inside here. That did this. So after the break of this high, we have this new level of structure. And now we have this one, and now we have this one. So I prefer to trade when these levels are closer to extremes than in the middle. For me, this is in the middle.
Oh yeah, I see.
This level.
I see. So it's not. It
can be like price can still react from there. I just prefer because in the middle price can do whatever he wants, right? It kind of it can have like small touches up and down, and maybe after the break of this, maybe price actually is going to go all the way down to these lows. But I prefer just as a filter. If I'm about to trade support and resistance levels, I prefer to trade extreme zones, or maybe for example after the break of this. Maybe I may have some trigger. This is kind of a clear high. This is a clear high as well, opposite to all these candles. This one is a very bit of a more clear high that maybe there could be this opportunity to reach then this level. And this could have been a scalp to look for just this move in here.
So the scalp in that case would have been after the big wick, after the big candle here.
This one.
Just the entry would be after that. Yeah. Oh yeah.
After the break of this, for example, or if you draw a trend line or something like that, maybe can even open before. It depends then on the trigger of the filter that everyone has it. But yeah, so you can have kind of define these two ranges, these highs and lows, and see how price behaves in between them, and try to wait to trade the extreme zones. Like avoid when this level is kind of the middle one. For example, from here or then, yes, you have a low, this one, but you can see a clear level of support resistance aligned with this one. Okay. Can you see a little bit of the difference of this one? Maybe comparing with the kind of with this one in here that you are looking at. First of all, we don't even have clear highs or lows now in here. This is a little bit already, it's noisy. Opposite to this level. But yeah, that's what I try to combine when I actually try to trade support and resistance, especially on the lower time frame, is for trying to look for scalps or for continuations of trends. For example, after the break of this level, yeah, maybe hoping for price to get closer to this previous level of resistance in here, or this one in here. Yeah, maybe you could have tried to look for.
That's the tricks, that's to be patient, because here you can see from 5 a.m. to the whole day was, well, if we look at the line, the yellow line you draw, the big longer one, it's the whole day waiting for this breakout.
Yeah.
And it's up.
But this was was it Saturday or this was kind of Saturday, right? Maybe the volatility is not even there to trade on the weekend. Sometimes there are good moves. For example, this move on a Sunday, I think it's a good move, but yeah, it's Saturday, and that's what I meant before. If you're actually just trading one asset, it's tricky because you're going to start looking for trades that may not even fit your trading plan, and you're going to start looking for forcing trades. So the recommendation is kind of go do some backtesting instead or something like that, or try to add other coins to your portfolio.
Yes. I think I will add one, because I don't know what to do on Ethereum right now. I'm a bit I don't know.
That could be your first filter. Just if you start a sentence with "I don't know," that could be already the trigger to maybe look for another asset that maybe is giving you some other signals that it fits your plan, or go do some backtesting to work more on your strategy. Because and it's okay sometimes to not even open a trade during the day if you are just trading one asset.
Thanks.
It depends. But yeah, even on lower time frame, you can be playing it between levels. Yeah. Any other questions about how to? And then
Well,
Seb, I think, yeah, go ahead, Seb.
Yes, and then the pivot points in that case. So you combine and if it's confluent, then it's even more strong signals.
Yeah, you can combine for sure pivot points, like combining the webinar that we did last time. Maybe you're going to see that there was the pivot point of the day. Maybe it was even aligned with the previous level of support resistance, and you can use it as a confluence for sure. For sure that you can combine both of them, and then to look for your trigger, for your signal, to look for the entry, maybe it's some indicator that you are using. Definitely, that support and resistance levels can work together with pivot points. Definitely.
Okay, thanks.
Any questions? Any specific questions that anyone else may have? I know Stefan then mentioned as well to maybe Stephen to mention to look for the space, but I think the space now, I think you start getting clear as soon as you break one level.
Yeah.
And maybe expect price to then fill the next one. Always manage your expectations on your own targets. That would be something as well to consider. What can I say here? This Ethereum
with your horizontal lines, the space becomes quite visible quickly.
Yeah, so when this is again Ethereum, if you manage to define them a little bit, I don't mean properly, but if you define them on the higher time frame, for example, from this high in here, I can see how these highs, maybe the next zone could be kind of the alignment of these lows, or then maybe eventually this level in here. So if you are looking for longs after the break of this, maybe this could be one of your first targets, or in a major scale, maybe you're filling out this box in here. So this could be maybe the first box. And after the break of this, we could maybe expect the fill of that one. Kind of, I mentioned that on dollar index last week. I had that box that I wanted to see being filled last week. Price did it. And this week, actually today, we just broke that actually box to the downside. And now kind of I extended a little bit box, a little bit lower now towards this low. However, I still manage my expectation in the sense that I don't expect price actually to go all the way here immediately. I'm aware that maybe price after breaking this low, maybe price is going to actually retrace up before maybe even filling out this box. And by this box, I actually have it by this low, but the first edge that I want to see is actually kind of this, because this is kind of a daily demand, not daily, but maybe a weekly demand that we have in here. And this low actually is aligned with a good level as well of these previous highs in here and kind of this level in here. So can you see the demand zone on the daily? Maybe on the weekly it's even more clear. Actually, it's not. So yeah, on this daily transaction between now this kind of a demand, we have then quite a few bull candles in a row, big momentum that was created in here, and now let's see if price eventually reaches there on the dollar index. But just be aware, maybe price first is going to react from here. Something that usually maybe as a clue that you need to be aware is, yes, after price breaks a major low, usually weekly or daily, because usually that's what you see then, where everyone gets super bearish, for example. That's actually then the moment for price to actually retrace up before then carry on to the downside, because major highs, lows, like daily, weekly time frame lows or highs, they are quite important. They're kind of shift in the market. and you can see maybe price retracing. Either way, for me, it gives a signal that price wants to go down, but then maybe either can maybe react from here. For example, now we have this level. This could be the next level that I'll be looking for a possible bounce, or maybe bounce from here to here and go up, right? Again, depend always on what price is doing to define actually the space that you have available. For example, let's just actually give a proper example of what I mentioned here. So this is quite a clear supply previous support. We actually have the demand, so it kind of matches with what I usually mention as a good zone. We have this break of the low, so you can see that this low actually it was already respected, right? The first low, the respected price went down. That one, if you wanted to trade this one, it's done. You should have already, the trade is done already. It's over for now. And now let's see if price eventually crashes from here and goes down. But if it doesn't, so we actually have this support zone. This is too much. We have this supply zone, sorry, aligned with this previous support that may become a demand. So this could be one of the options for price now to react from here and go down. However, this is a major low and price may go and eventually is going to have a deeper retrace, because that's what price does. So before actually price goes like this, but eventually is going to have a deeper retrace before then the continuation of the move to the downside. If this is about to happen somewhere in here, we may have price going up. It creates now this, it may respect a little bit more this level and now breaks it. And now this becomes a previous resistance that now becomes a support, and price may react from there immediately like this and go up, or actually lives there for the future, goes up, reacts from here, and now, yes, goes there, reacts from that level. Just delete this. And this is how you can start making predictions of what price may do. Price may react from there, respect it. It will be even better if price actually breaks this for a moment, and now price goes down, it reacts from there, and it's free to go higher. It still kind of respects this level. Maybe this demand, maybe this is not going to be the zone, maybe this is the low that's going to be used, which is nice. And now price reacts from there, and you're free to go, and you still use this previous level of previous support, resistance, and now supply zone. And you are free to go up, just broke this size, and you're free to go. We actually have a similar, if not exactly the same, on gold, which is exactly what happened. This is a little bit messy, so I'll select this one instead. So do you remember the example that I just showed? This is basically what we have in here. We have this previous level of support resistance in here. We have this supply zone in there. We have this high, price goes up. We create this level of support resistance in here. We have this supply zone, this demand zone. Price breaks the high, reacts from this previous level of support and resistance, but instead of then carry on and moving down, we actually are reacting from an important low on the left side. So I always know where this low is reacting from on the left side. And now price is going to use this previous level of support resistance that was used to hold price down. Now it's going to use it as our benefit to actually look and carry on the move to the upside. We already had the break of a high, price respects this previous support resistance, goes down, respects this previous level of support resistance, which is kind of an exchange of order somewhere in here, which is a demand as well. And now price goes higher. And there you go. And just to make it even better, we have this high, we have these lows. Price didn't really got there, unfortunately, but it was almost the same. And now we have the combination of what I just mentioned before, which is price going higher. It respects the first high in here. Price goes up, it even breaks a high, perfect, and now goes down. And now we have this previous level of support resistance in here. This is the demand that broke these highs, and now price touch it, and now price goes. and it collects liquidity, 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 break of a high, liquidity, and so on and so forth. So basically, this example, it's a perfect scenario of what I just mentioned maybe 10 minutes or maybe 20 minutes ago. I'm going to take a screenshot. If you took the screenshot from the previous one, this is exactly what I mentioned. First touch in here, price reacts from there. Second touch of this line that was in there, price reacts from there, goes home, goes. This is exactly what I just mentioned. This is this short gold on this chart on gold. It's exactly the best conclusion of this webinar, because it shows exactly what I was talking about during all this time. Can you guys see the pattern, or am I just being too pretending that it's clear? For my eyes, it's clear, of course, but I just want to be sure that you guys understand what I just mentioned. So the pattern is this, exactly what I drew before. So we have, and again, don't just consider even that one. We have again, this is exactly the same behavior in here. Basically, you can flip it, price react basic first from the low, and then it reacts from the other lows above it. It's exactly the reverse in here. First reacts from the high, and then it reacts from the other highs just below it with the supply zone. And here actually it was the demand zone in here, and this was the supply in here. So kind of just flip this chart as many times as you want, and you're going to see exactly the same in here and then in here. So it's basically this. We have this level, kind of creating something like this. Sometimes it creates a double top, sometimes it doesn't. Price goes higher, price respects it, price goes up, price breaks it. First phase, now the trades. First approach, trade it, price goes down, perfect, even creates a low, price eventually goes up. This is the next zone. Price goes up, breaks it, perfect. Price goes up, price goes down. Sorry, too much. Price goes down. It respects kind of the previous zone that was in here, kind of find where that decision that created the last low, which is this one. Now we are going to use that one as a bounce from. Perfect. Now price says this, kind of respectively. No, sorry, where is it? We had kind of these lows again. We break it, and now price goes. Forget this now. We have now react from here, go up, create a new high, and this is the next one. And there you go. This is what you have in here. Can you guys see it or not? Yes or no?
Yep. I did.
Yeah, so you kind of have the opportunity to go short in here. Let's pretend that we start looking at the market when this happens. We can have maybe opportunity to go short in here on the test of this. Good, we have a new low. We have the opportunity to go short in this supply, in this resistance, previous support resistance zone. Usually the supply is going to be around this zone, the same way that the demand is going to be around this level, right? It's going to be somewhere in here. You go to the wartime frame, you're going to find it, and it's going to be in here. So yeah, you have basically one short. Sometimes there's another short in here. Maybe you have now this long in here, because again, don't forget this low where it's reacting from on the left side, it's important. If this low is not reacting from an important zone on the left side, maybe all this doesn't happen. And maybe price just does this and carry on down. So again, depending on where this flow is reacting from. New long opportunity in here. We have the break of this, maybe new long opportunity in here. We have another high, perfect. This level is fresh. You may have another opportunity in here. And now, similar to what I just mentioned before, depending on where this high is reacting from, on the left side, we may just have this reaction, that discussion that we had before, from here to here, and price may continue, or we're going to have to move up. So this was kind of the green and yellow scenario that we just discussed before. There still can be a trade in here along if there's enough space, maybe on lower time frame. Maybe you can still get a 2-3 risk reward trades in here from here to here, or if price actually is already showing indication that wants to go higher, if this side doesn't react from a good level, and this one is more important, we can actually have then the longer trade. Yeah, and basically that's it. Just flip it, find your entries execution, and you can just basically trade this setup all over the chart, and that's it. Another screenshot. I will just share this screenshot. It's actually interesting because I didn't even look at gold before, and exactly gold is showing exactly what I just mentioned. So it just happens. I can see that Stephen is taking notes.
Hey, Pedro, I'm gonna have to log off here, but yeah, I'll be on tomorrow morning.
Yeah, you have to. Yeah, it's already 2 hours as well.
Is there any name for this pattern?
I call it Pedro. I'm kidding.
That's a good one. Okay.
Yeah, there isn't. Like there is a combination. Maybe this one just inside here is a Quasimodo. This one inside here. 1 second. Change another color. This one in here is maybe Quasimodo, which is one day I'll do a webinar just about it. Inside here, which is the pattern that I mentioned quite a few times. We have a low, a high, low, tau. By here, we have a low, a high, a low, a higher high, and by there, this is basically what you have in here. Right. Another pattern that I like to see in combination with this one, and all this happened on the previous long Ethereum analysis that I shared with all of you. We have inside there, we have actually this, and then go up. So basically this move inside here, we have this. 1 second, which is the color. When this high is being made, we have a move up, a retrace, a move up. Now we take this low, retest this level, and go up. This kind of the combination of the two that it makes it super powerful to then look for the reversal aligned with this previous zone, maybe in here, this one, and so on and so forth. But what I like, this one is just a specific pattern to look for. This one is the full reading of the price action. What's inside this rectangle? This is the full reading of what you can actually see all over. So yeah, this is one thing. This one is the full picture. But yeah, and you can combine for sure with the RSIs and so on and so forth. Maybe look for trend lines, and like as an execution, you can find it. So like the Ethereum pattern that I mentioned before, it was this one. I just broke this one. Okay, let's go here. 5 minutes. So it's this one, right? You can have this. This was the prediction I did, and we have the other one. Respects this level, goes higher, creates a new higher high, and then goes down, goes up. So it have the combination of the two in here, because we still have this low in here that creates something like this. Oops. Yep. This was the combination. We have this price. Yeah, too much. It's like it's hard. It's in terms of support resistance or not to practice. You need to spend quite a few hours just doing the exercise for yourself. Like you need to put in the hours. It doesn't matter because it's as you mentioned, Seb. it's confusing. It's not clear sometimes to see which line actually you should use or not. So it's going to be something of a repetition that you need to keep. You need to put the hours. You need to put the hours in order to like to master it, kind of, right? Otherwise it's going to be always confusing, and it can be. Like I didn't get to this level just by doing this a couple of hours, or just by following even for watching people doing it on a webinar or on YouTube videos. You need to put the hours in. My recommendation will be now just rewatch this kind of this webinar, or at least when I'm talking about these patterns, and just keep practicing. Just see, okay, the way I'm doing or the way you do it, and so on and so forth. Because you need to put the hours in order to see which ones actually make sense to you, and then you see, because it's going to need to be kind of you need to break your limiting beliefs in terms of believing that these support and resistance levels actually work. Because if it's just if you're just taking by certainty what I'm telling you, it's not going to work for you. That's the main point of it.
Yeah. Putting the hours clear for me.
Yeah, it needs to be done. It's kind of the same with backtesting. Like, it doesn't really matter if I show you, like, I just show you now exactly this pattern, how many times it works. Even today on Euro, there was a short in there. There was a short on Euro today with exactly this pattern on the intraday level. You can see exactly price creating this low, high, create a lower low, price retest this level. You could have had the short in here. So there was, like, but doesn't like, it doesn't matter if you just see me doing it. You need to put the like kind of the hours in to actually see it, and you'll see this pattern working, and sometimes actually it rejects. Again, the importance of knowing where this eye is reacting to on the left side, if it is an important zone or not. It also matters, right? So price maybe it respected now this level. Maybe now we're going to see price going down and respecting these previous lows that I just mentioned, right? This can be already at the creation of just a scenario that I just mentioned before. And again, I think actually it is. 1 second. So what we have in here in Euro, and it keeps repeating itself. So we broke this, we had these lows in here, we broke them, kind of, and that's what actually price then reacts from. But then we had these ones in here, and now price reacts from there. And then let's see if price eventually is going to react from this level and goes, right? You can see that price respected first level, it respects this second level, it went down, and now let's see if price eventually is going to react from these ones. Again, similar scenario on Euro. I think this was the one I mentioned before. We have the first reaction from this low, and then the final reaction from our accumulation of this. The next was higher, and then price goes down, and so on and so forth. And this keeps repeating itself. The same in there. You see, like I can be doing. Where is it? Second, it's just going down all the time. Yeah, right. Even this one reacts from there first, and then it eventually goes and reacts from the other one. Like it says, it's just the way price moves. What can I say? But yeah, the repetition of the support and resistance is something that needs to be done.
Thank you. Thank you.
Just focus on the bigger ones. That will be the first step. And then yes, and then if you want to just practice on the 5 minutes, because I know that you look for the 5 minutes, maybe that will be a good idea. What I mentioned, like trade ones that are kind of close to the extremes, like this I mentioned before on Ethereum, instead of the ones in the middle. That could be already a good sign as well. And then find the clear ones. And if you mention that if you look at maybe this one is the one, but now don't forget that price actually maybe created just an accumulation of highs just above it. So maybe that's now the new zone. Instead of being this green line, it may become now this white line in there. So yeah, it can have small adjustments. or in this case, actually price maybe already took this one with this week. So now this one is weaker. Basically, you see, because price is dynamic, and that's the situation, right? You see, you had this demand, price broke it was aligned with this one, price broke it and went on. And maybe this one is already a reaction from this major level in here. Maybe because it's already like it's dynamic. See where price is reacting from or not. Yeah, and so on and so forth. Yeah, and then the space I'll be carrying every webinar. I'll be talking about space. Every market call I'll be talking about space. So hopefully it's going to be a concept that's going to be also learned by all of you, applied by all of you. But yeah, this gold chart actually it's a perfect scenario to conclude this webinar. Yeah, I took screenshots. I can share one screenshot in the just underneath this webinar and the link with the recording. Okay, guys.
Yes.
Are you good, Stefan? Good, Joaquin, the survivors of this of this webinar. Are you taking notes about what I'm saying, or is it something else?
Some of your notes and some of the other things. A mixture.
Okay.
Yeah, I took
Okay,
some
Joaquin.
screenshots.
Great.
Some screenshots. So,
yeah, great. So yeah, this can be like a strategy can be applied around this, or trading plan can be created around these zones. But then of course it's going to be execution, it's going to be a risk reward, it's going to be the second part of the trading plan, which is what matters as well. This is the first step. Okay, guys, thank you for joining. I'll go tomorrow. Yeah,